if you die, whoever the beneficiary is going to get the $1 million.
Right.
That's what they're going to get. That's all. If you have a cash value of $200,000, and when you die, they keep your money.
All right.
Which makes it absolutely horrendous.
A lot of you guys were commenting more on my TikTok regarding to a video you just saw about Dave Ramsey talking about whole life. In the video, I mentioned if designed correctly, as your cash value grows, so does your death benefit. I also mentioned you still end up with more money being paid out. I'm going to give you the full breakdown. This is an age 40 male who's putting in $100,000 per year for 10 years. Keep in mind, the numbers in years can be anything you choose. Year 1, he put in $100,000, which is the blue box. Green box is his cash value, and the orange box is his death benefit of $1.4 million. On year 4, he broke even. In this case, he put in $400,000, and on year 4, he got $400,000 and more. Now his death benefit is $2 million. If he died on year 4, the company keeps the $400,000 and pays out $2 million. Keep in mind that day 1 he started out at $1.4 million. Year 10 is his last payment because he chose to do it that way. He puts in a total of $1 million, have a cash value of $1.2 million, rounding it, and a death benefit of $3.3 million. To top it off with sprinkles, he can get access to his cash value and use it while he is still alive. Let's say he dies at age 80. The cash value goes to the company and the payout to his beneficiary is $5.9, rounding it up, $1 million, income tax free. Oh, let's wrap this up. If he dies on age 80, he put $1 million, his cash value grew $4.9 million, and he has a death benefit of $5.9 million. The death benefit has a direct relationship with the cash value. So as your cash value increases, so does your death benefit. If you found this video helpful, subscribe and hit that like.